Hey, what's up, guys? This is Cody the Coin Raptor coming at you with another Bitcoin monthly breakdown. And this is going to be for the month of January 2025. And so we're going to go ahead and get right into it. So, what's interesting about this report here is they actually come out and they say this is ARK Invest's monthly Bitcoin report that Bitcoin right now is actually in a pretty healthy place. So they mentioned specifically here that the Bitcoin is above its short-term holder cost basis, its 200-day moving average, and its on-chain mean. We're going to look at that in a chart here in a minute. They also go ahead and say that the Bitcoin balance in U.S. spot ETFs has reached a new high of 1.17 million. This is particularly bullish and largely, I think, one of the reasons why we've seen Bitcoin even just get to this point of near 100K. They also talk about the fact that the dollar has strengthened. This is going to be one of the big reasons why I think that the current price action has actually slowed down. And they've also said that signs of a slowing rent growth are beginning to calm inflation fears. This is going to be mostly for the macro economic picture. And they're also going to compare the dollar and gold as well. And I think that's actually a really important comparison, especially if you think, well, they're going to compare Bitcoin and gold, and that's especially important if you think that gold and Bitcoin are related, and Bitcoin is a digital gold. So we're going to go ahead and get right into it here. They've seen some increase in bullishness for the miners' revenue. That's gone up. The active owners, that's been upgraded to neutral. Other than that, there's been no changes. And then for the other metrics, the expirational futures basis is now set to neutral. All right, so they start off here with looking at Bitcoin from a technical analysis point of view. And the primary takeaway for this is going to be that short-term holder cost basis, which is sitting at about $91,000, almost $92,000, right about here, this green line. So this has been a significant support for Bitcoin over the past couple of years. There's been a couple of times in which you've seen it's actually gone below that level, but for the most part, this has actually been pretty stable as a support for the last couple of years, moving out of the bear market. So if Bitcoin does pull back, and especially if it pulls back under this 92,000-ish region, this would definitely wind up being an opportunity for someone who's interested in maybe getting into Bitcoin. So because this level right here, Bitcoin doesn't really spend a lot of time below it. Now, the other things you can look at are the 200-day moving average. That's pretty common for technical analysis, sitting at about 77,500. And then that short-term holder realized cost basis at a rock bottom $63,000. This is some really important support levels to look at. And again, if we continue to see Bitcoin pull back, then this is areas that I'd expect to find support for the price action. Next, they talk about the spot ETF assets under management. The fact that this has actually gone all the way up here, you can see here in green, they've outlined the U.S. spot ETF balance, and this has kind of gone just massively higher. And I said $1.17 million. You can kind of see this really accelerated after the election, and that caused a lot of Bitcoin's rise after the election. And they say that this suggests consistent demand for Bitcoin, and I would definitely agree. I think that this is going to be one of the primary methods that people go and get access to Bitcoin. Your average investor who don't actually want to put together a wallet and they want to just go ahead and have exposure, they'll go and buy a spot ETF instead of getting a hard wallet or a soft wallet or cold storage or warm storage wallet. So, and then on top of that, I think that this will wind up being the catalyst for the next Bitcoin move higher. We're going to see increased adoption, and we're going to wind up seeing more people going and buying these spot ETFs. Next, they talk about the purchasing power of the market and specifically mention the stablecoin supply. It's actually been increasing, the stablecoin supply here. And this is important because stablecoins can be used to purchase Bitcoin. Now, generally, when you're in the crypto ecosystem, you tend to stay within the crypto ecosystem. So you'll see risk on and risk off, mostly in the crypto ecosystem. That means risk off buying Bitcoin, risk on going and buying altcoins. And I think that actually as the stablecoin supply increases, that gives you more of an opportunity for people to go in and buy more Bitcoin and more stablecoins as well because you're in that ecosystem. So they say this is bullish. I would definitely tend to agree with that. It's increased month over month with very little interruption. Next, they talk about the long-term holders' realized profits outpacing the realized losses. Now, this is all just kind of a fancy way of saying that we're still in bull market conditions currently. You can kind of actually see the bull markets by these green spikes up here, followed by some it's a little bit of sideways action, followed by some additional green spikes. And so this kind of suggests that the momentum, the short-term profits are outpacing long-term profits, which is, in the short run at least, signs of healthy demand. Okay, so that's something to keep in mind. They're basically saying that we're still in a bull market currently. And then they talk about the derivatives market. Now, this one is really interesting here because they think it's actually neutral. They're saying that it's not speculative currently with derivatives, and again, things like your futures contracts. Now, actually, I think I would disagree with this personally because I have seen that, especially over the last couple of months, we've seen some really strong speculation and really strong market volatility, and that tends to happen when people are leveraged and they play the options contracts and futures contracts. So, but they're saying here that this is according to, they're looking at the Bitcoin perpetual futures funding basis versus 3-month futures basis. And they're saying that this is kind of more in line. It's neutral, and there's not any sort of overheating in the derivatives market. Now, if you're bullish and you believe what they're saying here, then that would also mean that, hey, listen, they're not setting themselves up to be crushed. In case of a huge Bitcoin move to the upside or the downside, then these traders are not going to have to quickly liquidate their current position. So this is another way of looking at that. But I think that the opposite's actually happening. Personally, I've looked at some other metrics, including the volatility. You guys can go check my previous videos. The volatility has been increasing. The amount of people who are leveraged in the system are actually increasing. So, I mean, but otherwise, ARK views this as a neutral. Next, they talk about the macroeconomic picture and specifically the dollar index. Okay, so they're saying here the dollar index, the strength of the dollar is increasing, and that's something that's actually kind of a headwinds for Bitcoin. As we've seen, as I've talked about on this channel many times, the strength of the dollar and Bitcoin are inversely correlated. They tend to move opposite of each other. So as the strength of the dollar increases, Bitcoin tends to decrease. This is one of the reasons why we've seen lately such a huge resistance to Bitcoin actually going up and increasing in value, because the dollar as a competing asset is strengthening, because people want stores of value, and as the dollar store of value increases, then the alternative assets, aka things like Bitcoin, tend to decrease in their favorability and their value, or their perceived value. So this case, they're saying that the dollar index is strengthening. We've seen that. It's actually kind of close to its all-time high, reached back in about like 2021 or so. This went all the way up to like 115. And then the ultimate high was back in 2000 at about 120. So this right here, I think, is definitely due for a pullback at some point. Normally, when the dollar spikes up like that, you tend to see a very quick pullback. And part of this has to deal with the fact that the Fed and monetary policy, but I'm not going to go into that for this video. But they're saying here that this is neutral in ARK's view. They also talk about the Bitcoin to gold ratio. Now, the Bitcoin to gold ratio has been very interesting because gold has just been on an absolute tear, and Bitcoin has been kind of stagnant for the past couple of months, apart from, say, November. They're saying here that they're suggesting short-term divergence and safe haven demand for traditional versus digital assets. So essentially what this means is that there's been a flight to safe haven assets, and that has traditionally been gold. And I think what we're seeing right now is that we just haven't seen that overall adoption of Bitcoin as a safe haven asset for a majority of the population. There's certainly a small part of the population that thinks of it as a safe haven, but we have not seen that just yet. And as far as I'm concerned, this right here is the holy grail of Bitcoin adoption. As if Bitcoin becomes the safe haven asset, then all bets are off, and Bitcoin could rocket all the way up to 200, 300,000, no problem. But so far, we haven't seen that level of adoption yet. But I do think that level of adoption is going to be coming later on. They also talk about the slowing number of slowing rent increases. So they're saying new tenant rents are declining, suggesting that housing price pressures and broad-based inflation could surprise on the low end of expectations. So essentially what they're saying here is that because it's such a large component of the consumer price index, that you have a slowing of the rate of inflation, or they're expecting a slowing of the rate of inflation, which would mean the Fed can lower rates, which means that it would be very bullish for Bitcoin. So something to keep in mind here. They're usually pretty bearish on these macroeconomic picture, but lately ARK has kind of shifted and they've become a little more bullish. Okay, so that's the end of the report. Again, just a quick summary here. ARK has actually come out. I think they're actually still fairly bullish on Bitcoin. We're just kind of going through a period of sideways action, of consolidation. And then again, taking a look at these crucial supports at 91 and 77 and about at 63K. Those are going to be very strong supports for anybody looking at technical analysis for Bitcoin. Now, finally, the Bitcoin balance in the U.S. spot ETFs reached new all-time high. Now, again, that's key. This is probably the most important thing here. As this continues to raise adoption, we're going to see more money come into those Bitcoin spot ETFs, which translates into a higher Bitcoin price as well. But let me know what you guys think below. Leave a comment below if you think this is a bullish report. If you don't think it is, let me know. Let me know what you guys are up to, what you want to see. I'm definitely interested in that. Thank you for making it to this end of the end of the video here. Please like, please share, please subscribe. I appreciate that. And I'll catch you guys in the next video.